You know, guys, the housing experts have been wrong about a lot of things over the past couple of years, but one of the most recent things that they have been really wrong about is that when mortgage rates start to come down, then buyers are going to flood back into the market. And that's not happening, okay? Because mortgage rates are down substantially. In case you haven't been paying attention, back in October, mortgage rates for a 30-year mortgage hit 8%, and now today they are as low as 6.6%, you know, and that's for the most well-qualified borrowers. Still, most people are going to be getting a rate over 7% if you don't have stellar credit and income. However, that is a huge drop in mortgage rates in just a month and a half, guys. It really is. Now, even though we've seen such a huge drop in mortgage rates, okay, applications for a mortgage to purchase a home declined 1% for the week, and we're still 18% lower than the same time period a year ago, guys. That is crazy. Now, I understand that mortgage rates were actually lower a year ago, and it can easily be attributed to that. However, they were saying, oh, as soon as mortgage rates drop, people are going to rush back in to buy. Even Barbara Corcoran's a big one. She keeps saying that, right? Well, mortgage rates are down substantially, guys, like 1.5 points in literally a month and a half, which is kind of unprecedented, really. But yet, the opposite is happening. Less people are buying, not more. Now, one thing that is interesting about this, though, is that even though people are not rushing back in to buy, they are rushing out to refinance, which on the surface doesn't make a lot of sense, right? Why would people be refinancing when rates are still at, you know, close to 7% for a lot of people? Because the refinance applications went up 2% for the week, and they're 19% higher than the week before. And it's also 18% higher than the same week 1 year ago, even though interest rates are higher now. That doesn't make any sense, right? That's upside down. Well, actually it does make sense, guys, because people are broke, all right? And so since a lot of people treat their house like their biggest ATM, the big piggy bank, they refinance the house, pull out any equity that they might have with a cash out refinance, even though their mortgage rates and their mortgage payments gonna go up. Doesn't matter, because I need the money today. So we'll deal with that, and you know, when we can't make the payments, we'll just let it go to foreclosure or short sale. We're not going to have any equity in the house anymore anyway, so who cares, right? I think that's kind of the mentality for people who are doing this. And it should be a huge warning sign for anybody who thinks that everything is A-okay in the economy right now, because clearly it's not, when you're starting to see people refinance at a time when nobody should be refinancing, guys. Because all of this is painting the picture that I have been telling you guys for months, right? Refinancing is up, even though interest rates are higher than a year ago. Why? Because people are broke. People are not rushing back out to buy in this housing market, even though rates are down pretty substantially from just a couple of months ago. Why? Because people are broke and can't afford to buy even with these lower rates, right? And a lot of the housing experts are stunned by this. They're like, oh my God, you know, we thought it was going to be totally the opposite. We thought that everybody was just going to pile back in, but it's not happening. Now, also, some of this could be seasonal. I'm not going to say that it isn't, guys. It's right around, you know, the holidays are here, and it's not a big surprise that home sales are slowing down. They slow down this time every year, but you would think that people have been so desperate to buy a house. That's what everybody keeps saying on the other side of the argument, that, you know, there's this huge pent-up demand from home buyers, and you would think that these lower rates would get them to jump in, but it's not happening. I would think that if somebody really wants to buy a house, holidays or not, if the right deal / opportunity comes along, you're going to jump on it regardless, but we're not seeing that happen. And all of this is echoed in the sales data as well, guys, because even though we saw home sales activity tick up ever so slightly in November, 0.8%, it's actually still down by 7.3% from November of 2022. So that's still a pretty substantial drop in the amount of transactions closing. And this is why so many people are getting desperate in the real estate industry, guys, like real estate agents and mortgage brokers. Like, I made a video a couple days ago, you know, talking about all these horrible things that real estate agents will do and say. It seems like a lot of people didn't really like that video. I kind of took a chance, made something new, but sometimes you take a chance and things don't work. But if you missed it and that sounds interesting for you, go check that video out, give it some love. Here we have a house for sale for $1.7 million, and clearly they are in no hurry to sell, considering they've been listing this house on and off for sale since the middle of August of 2021. So 2.5 years
This house has been on and off the market at all different prices, anywhere between $1.5 million all the way up to $2 million, now down to $1.7 million. And this is just a classic example of sellers playing games and not really being serious about selling. But I think they have time to wait, considering their property tax bill is only about $3,900 a year, because they bought this house back in 1988 for only $97,000. Wow, look at that.
Now, Lawrence Yun, he's the chief economist over at National Association of Realtors. We talk about him all the time here on the channel. He says that, after a few months, we're going to see a revision in sales because every single time we get lower interest rates, home buyers react and home sales go up. He says that it's just going to be a matter of time before we see the sales numbers start to tick up with these lower rates. And maybe he's right. I usually don't agree with much that Lawrence has to say, but on this one, I would say he's probably right. And back to what I was saying about more people refinancing than actual people jumping back into the market, here's something very suspicious with this data, guys. Listen to this. A bunch of the people who are refinancing right now have VA and FHA loans. Those are government-backed loans, and typically with those loans you already have some of the best interest rates to begin with when you first get the loan. But they're saying that the majority of people who are refinancing right now have a VA or FHA loan. Well, that doesn't make any sense, right? Because if you already have a really low interest rate, why are you refinancing? Oh, well, they're saying, a lot of these people have 8% rates still, and, they waited too long to refinance when rates were really low. Like, huh? Guys, this is a flat out lie, okay? And I'll tell you why. Because nobody that has an FHA or VA loan is getting an 8% interest rate, guys. Even when rates were 8% back in October, I guarantee you, for FHA people and VA borrowers, they were getting rates lower than that even when 30-year rates were at 8%, number one. Number two, anybody who's in a position to refinance needs to have some equity in the house and also probably bought at least a couple of years ago, if not longer. And those are the people who are refinancing, and you can guarantee that those people do not have rates above 8%. But they're trying to make it look like they do, and that's why we're seeing this uptick in refinance activity. But really, it's all just to mask the truth, which is that people are broke and they're using their house as an ATM. That is the reality of what's really going on. And listen, I'm not just saying this to speculate. I'm saying this because there's literally no other explanation. We know for a fact that 90% of mortgage holders throughout the entire country have an interest rate under 6%, guys. So for the vast majority of people to get out there and refinance, we need to see mortgage rates go below 6%, which we are not there yet. And then you might start to see a really big uptick in people refinancing, okay? And even then, you probably still need to get closer to the 4% range, because 90% have a rate under 6%. Maybe it's 5.8 or 5.7. It's going to have to come lower than that to entice people into a refinance where they're saving a substantial amount of money. And if they're not saving money, the only other reason to refinance your house is to pull the equity and pull cash out of it. So it's not rocket science. It's just that what we're being told is not adding up with reality. And the reality is, which is why I've been saying for a long time here, that all the experts are wrong. As soon as the rates drop, people are going to rush back in and buy, is simply because of affordability, guys. The prices and rates that we are seeing today are still far beyond the reach of what the normal home buyer can afford, guys. We've gone over this a bunch of times before. I'm not going to dive too much into this, but we know for a fact that the vast majority of home buyers cannot afford a house at these prices and rates, and having the rate come down to where your new payment is only $75 a month lower is not going to entice people back into the market, okay? That's the average how much people's payments are dropping with these lower rates. It's not a huge amount like a lot of people think. You only see a huge amount of difference in the payment when the purchase price is a lot higher, right? But most people are not purchasing high-priced homes because people can't afford it. So the lower rates make a much bigger impact on people on the higher end of the market. If you're looking to finance an $800,000 million house, having rates come down from 8% to 6.5% is substantial, guys. But when you're, buying a $300,000 house, it's barely making a dent. And this is why we're starting to see inventory tick up, guys, because the houses that are listed for sale are not selling, and little by little we're starting to see new listings trickle onto the market. We saw inventory increase 2.4% from a month ago as of the November numbers, according to Realtor.com. And I think that's a trend you're going to continue to see throughout 2024, guys. You're just going to continue to see the inventory inch up and inch up. With the exception of the spring selling season, that's when you're likely to see inventory go parabolic like we do every single year. But afterwards, I don't think you're going to see it subside as we normally do throughout all the other cycles. Right? We usually see inventory come way down after the spring and summer selling season. We're going to see it come down, but you're not going to see as sharp of a drop off. That's my prediction anyways, because you're just not going to see the amount of buyers that need to be there in order to, push the inventory down essentially. And this is already an early indicator because we're seeing the rates come down, we're seeing the inventory go up, but people aren't rushing back in to buy. And so that's a preview of what's to come in 2024. And here's the other thing. If you live in an area that's low inventory right now, chances are you've probably gotten used to the fact that there is low inventory and you're not rushing out to buy anything because you're not seeing an uptick in homes for sale that you're interested in or that you can afford, right? So these lower rates mean nothing to people that still can't afford the house that they want to buy. You know what I'm saying? So that's another big factor that people need to look at here. And I think you're going to see a lot of people just continue to wait things out until they find the right house for them, guys, because most people are not investors. Most people want to find the right house. And somebody made a comment the other day on one of my videos that I actually agree with. And they said, listen, Michael, not everybody's concerned about the interest rate or what the price is or anything like that. A lot of home buyers are more concerned about the location. Is it in the right school district for my children? Can I actually afford it? Does the house have all the things I want, features wise? And then when you find that, that's when the right time to buy is. And I agree with that, guys. And I think that's how most people approach buying a home. However, the problem is when you're just buying off of emotion like that and you're ignoring all the fundamentals that are happening surrounding you, that's when people can get burned financially, unfortunately. So I agree with why people typically buy a house. That's not really disputed in my opinion. But the problem is there should be more to consider than just that. And if you're willing to take the chance and buy the house anyways, just because it checks all your boxes, you don't care what the market's doing, guys, then knock yourself out. I'm not here to tell you not to do it. I'm just warning you of what might happen if you do it. But it's this exact dynamic that is starting to get flipped upside down on its head, right? During the pandemic, we saw the huge run up in home prices because rates were low and inventory was high, right? Well, now rates are starting to go back down, inventory is starting to tick back up, but we're not seeing people come back in. And we're likely to see those same dynamics at play, but in reverse. People are going to say, hey, well, maybe rates are going to be even lower in a year from now, and I can wait. I have this nice rental now. Or, I already saw prices come down 5% where I live in 1 year. Maybe in another year from now, they'll be down by 10%. You know what I'm saying? So people are starting to realize that things are changing, and they're changing pretty fast for the housing market, and that the same dynamics that push people into FOMO and the fear of missing out on the way up are the same dynamics that are pushing people into the let's wait and see mentality on the way down. Now, Redfin recently put out this report that I thought was fascinating about home affordability, and they determined that with their data going all the way back to 2013, so we have 10 years worth of data here, that this was the least affordable year of the housing market ever on record. Now, that's only 10 years of data, right? So we could see some years in the past when maybe it was actually worse, like maybe in the 80s or something like that. But it's been a long time, to say the least. They looked at 97 of the most populous US metros, right? And what they found was that in 2023, only 15.5% of homes that were sold were deemed to be affordable by the average household, okay? And that number dropped from 20.7% in 2022, and it was at 40% in 2019. So you can see how much affordability has eroded from 2019 to 2023. And if you just look at this graph, going all the way back to 2013, guys, you can see that affordability was relatively stable up until the pandemic. And none of that comes as a surprise, but it's good to see this visual representation of this, because what this means is that that line is likely to go back up in the future. It's not going to continue going down. We can't live in a situation in a world where homes are unaffordable everywhere for the average family, you know? That's not gonna last. And you know what, guys? People are doing something about it. Like literally Realtor.com came out with their list of the top 20 hottest housing markets for November of 2023. And when you look at this list, you can see that the vast majority of them are within the affordable range, right? In fact, number 3 on this list is close to where I grew up back in Illinois, Rockford, Illinois. They're number 3 on the list, where median list price is still only $209,000, guys. And I can tell you, growing up over there, even how low that is and how cheap that sounds to a lot of people, that's still high for that area, okay? The home prices have actually exploded over there. Why is that? Because people are desperate to find an affordable place to live right now, and they're moving to places where it is affordable, like Rockford, Illinois. Even right above it, Rochester, New York, okay, $239,000. You have Monroe, Michigan at $276,000. You know, you have Akron, Ohio at $215,000. Dayton, Ohio at $225,000. Lafayette, Indiana, I was there on my road trip. Houses are cheap there. You know, $280,000, even though I wouldn't recommend anybody move there. And it's probably the case for a lot of these areas, you know? But they came out with this list because this is where people are buying houses right now. And obviously there's some expensive areas too, but most of them are in more affordable areas, guys. But unfortunately, all these places where the prices are cheap and people are flocking there to buy the homes, they're at risk of becoming the same victim that Florida has, basically a victim of its own success. Like if anybody who saw yesterday's video, I showed you how Florida's real estate bubble is beginning to pop. Well, that's because so many people moved here and the prices went parabolic for a couple of years there, and now that trend is starting to reverse. Well, these other places on the list here, where these home prices are still really cheap, could see the same exact thing happen, but in a few years from now, because everybody's moving there now, taking advantage of these lower prices, pushing the prices up, right? And eventually what happens? The prices start coming back down to reality, to what people can afford. But it's not like, you know, these markets are useless, guys. Like, first of all, they are affordable, number one. And if prices continue to trend up in these areas, it can present some good investing opportunities like flipping or, you know, buying rental property, things like that. I'm not telling you should do it, but I'm just saying that, you know, when the prices are going up like this in areas, you can take advantage of it as a real estate investor. And I have no doubt in my mind that there are going to be investors out there doing exactly that. Now, I have a story here I want to cover about couples buying houses together, because there was a couple, they're engaged, and they decided to buy a house together, and the husband agreed that he would make the mortgage payments and that the wife would pay the property taxes every year, okay? So still kind of a lopsided agreement. The husband's probably going to end up paying more because the mortgage payments typically are going to be higher than your property taxes every year, but that's what they both agreed to, and that's fine, right? Well, the problem is, whenever they bought the house, they decided not to have the property taxes escrowed. So the wife would have to be saving up enough money every single month to pay the property taxes when the bill comes, right? When the tax bill actually arrived, he asked her if she was putting money away every month. Her answer to him was, "Don't worry, I will have the money to pay the taxes, okay?" But when the time came to actually pay, she said she didn't put away any money, and she actually told the husband that as the man, he should pay all the bills. So they ended up breaking up kind of for like a year. She moved out of the house. The guy was there paying for the house on his own anyways. And then a year later, they ended up getting back together, and he just kind of accepted this agreement where, yeah, I'm just going to pay for everything now. They've been living in the house together for 4 years, and she's never paid any of the bills, not even a utility bill, guys. And his concern, if he sells the house, is she going to be entitled to 50% of the house when they get divorced? Because that's pretty much inevitable when you're looking at a relationship like this, if you ask me. And you know, the crazy thing is, she actually can help pay the bills. She has her own cleaning business, and she makes enough money to pay half the bills. Talk about an awful relationship, guys. Like, this is just a huge red flag. I realize that everybody's relationship is different, and some people, you know, might make the agreement where, you know, the husband will pay all the bills and the wife will be a stay-at-home mom. And if that's the agreement from the beginning, there's nothing wrong with that if you ask me. But the problem, of course, comes when you had one agreement, and then when the push actually comes to shove, that the other person tries to change the agreement, you know? To me, this is a classic example of women using sex as a big tool to get out of paying the bills, okay? That's what this is to me. So I wanted to bring this up as a huge warning for all couples out there, whichever side of the relationship you're on, if you agree to buy a house with somebody and you guys aren't married, it needs to be fully transparent on what the agreement is. And if the other person decides to break that or change it later down the road, then clearly they cannot be trusted, guys. And you should not be moving forward with the marriage like this idiot did. You know, this guy married the girl anyways, you know, and now he's worried that when he sells the house, he's going to have to give her 50%. Like, of course you're going to have to give her 50%. Like, the story says that because the house is in Illinois, and if he can prove that she never paid for any of the house, then the judge might rule not to give her 50% of the house. But you know what, guys? You know how it goes with divorces and all of that. People end up getting screwed in the end. People make settlements just to be done with it. And it's a recipe for disaster is what it is. So if you're ever in a relationship like this and somebody tries to change the game halfway between after you already bought the house, then that's a big sign that you should probably get rid of them before you end up getting married, because that's just a preview of what the entire rest of your life together is going to be like, of the person agreeing to something and changing their mind later down the road and leaving you holding the bag. So huge heads up on that. It's a little Christmas relationship advice for you when it comes to real estate. So once again, guys, Merry Christmas. One for yesterday, one for today. If you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.